I use the analogy of shining a light to the left. Where it reflects is the previous level of high, low, anything lower between is in the shadow. That's a good one. Ty says, might be a stupid question. It's not a stupid question, Ty, unless it's like, how can I make $1 million on a single trade with no stop loss? Then it's a dumb question. Yeah, but aside from that, it's probably not. Might be a stupid question. How many candles on a given chart should we be looking at for a good view of the time frame? For example, you can zoom out and have hundreds of candles on the chart, but you can also zoom all the way in and have like 5 candles. So there's no, it's a really good question. There's no candlestick requirement. There's no set number because the markets are so fluid, meaning you'll have periods in the market where you can get a lot of information in 100 candles. You'll have periods in the market where you can have a lot of information in 5 candles, in 50 candles. So like, for example, look at dollar yen right here. How many candles is this? We're looking at 88 bars, right? So almost 100 bars. But this doesn't give us enough information for any type of higher time frame analysis, does it? What would you guys say? In these 88 bars, maybe 100 bars if I go back here. 96 bars? Yeah, no. But if I go back here and I see, okay, well, I have this low, this does give me a relevant amount of bars. So 160 bars is fine. If I go to euro dollar, right, I can go back 533 bars. And does this give me enough relevant information? I would say no. Haha, I would say no. I'm not sure if someone typed yes or if that was yes from the previous one. But I would say no. Because if I'm going through my IPDE process, right, identify, predict, decide, execute, right, I know that price action has recently, right, based on my 188 bars, broken and closed above our previous level of structure, right? Would 100 out of 100 traders agree? We have broken and closed above our previous level of structure, right? You have to agree. There's no denying it. So the question I want to ask is, okay, if we've broken and closed above previous level of structure, then my prediction is that price is likely to go up. If price is likely to go up, where are we likely to go up to? So there's 2 questions that I need to answer. One, are we in a position where we're still expecting a trend continuation trade? Meaning that I know we've broken through, but have we broken through to another level of structure up here? And if we have, where do I place targets at? So there's no way. Well, Paul says, how about we look left? But that's the point, Paul. We can't if we're only saying that we only want to have a certain amount of bars, right? So that's the whole point of it's fluid, right? It's fluid. We can't just say like, hey, I'm only going to look at last 200 bars, or I'm only going to look at 2,000 bars. It's going to be different on the situation. On the dollar yen, we got plenty of information within 200 bars, right? Plenty of information. I saw exactly where we're at. That's all I need to see. I don't need to see anything else on the dollar yen. I saw my most recent level of important structure because it happened to occur more frequently. On the euro dollar, right? Well, at this point in time, if we were trading right here, then this would be enough. Hell yeah, right? This would be enough bars. And this would be only 157. But because we violated this level, now I have to look back even further to see, okay, we broke it and closed above structure, but we have come back to a previous level of structure. Now I see the information that I need. And this happens to be, 500 or 1,000 bars away? Almost 1,000 bars away. So instead of basing it off of a certain amount of bars or candles, or even time, right? Even saying, well, I always look back 5 years, right? It's irrelevant. You want to look back to the point of whatever is important for you. And for me, it's structure, right? For me, it's support, resistance, supply, demand. So I'm always looking for my most recent outside level of structure. Outside level of structure, remember, is a level of structure that hasn't been violated. So that's the information I need. So if I'm looking at this chart on euro dollar, I'm going to zoom out to figure out where we are. I always draw a line in because it makes life nice and easy. And then I'm going to zoom out and be like, okay, here is our last, right? Our most recent outside level of structure. So this is as far that I'm going to look back to get the information that I need. Does that make sense, guys? So the answer is we should look as far back as needed to get the information that we need. And we don't want to put a requirement on it. We don't want to handcuff ourselves, because we don't want to say I can only look back 200 bars and then like 201 bars ago there's this massive important level of structure. But we also don't want to look back too far. Like, we don't need to look back here. This is one of the things I see a lot of traders do, is be like, Akil, and this is kind of the things where you also convince yourself to do things you're not supposed to do. But like, are we at a level of structure? You'll have a line right here. And you'll be like, well, oh no, here's one. So here's something I don't agree with at all. And I've had mentors that have said differently. So I've heard people define, let me know if you ever heard this before. I've heard people define like major or important levels of structure as being levels of structure that were touched 3 times or blank amount of times. Have you guys ever heard that? My mentor even taught me that. One of my mentors. And again, my mentor is also in the business of it. I learned a lot more from my mentor after I became a better trader, meaning that my mentor purposely would simplify things because as a newer trader, we needed to be simplified, right? We were pretty young and dumb. So we needed like very strict rules that couldn't be black or white, couldn't be, no subjectivity. And then as I got older and started having more conversations, I realized what he was doing. He's like, hey, I just gave you this because this is what you needed at the time. Now that you've reached that next level of trading, you can kind of think outside the box, right? It's kind of like when, you do stuff for your kids. Like, you tell your kids to do one thing because like if you tell them something more detailed, it'll never get done. So I'll just be like, just do it that way. Just make it pink, right? So, but many of you guys have heard that. So the problem with that is this. What traders will do is they'll say, okay, this is not major structure unless it's hit three times. And then it's like, okay, 1, nope. 2, 3, let's say we need another one. 4, 5. This is now major structure, right? But in reality, does what happened here in 2015, right? In 2015, does this have any effect on current price action? Not at all. No, not at all. Like a short person, not at all. There we go. Got a laugh out of there. That was bad. That was kind of good. Yeah. So, but in our minds, we've created something to be more than it is. So that's why I like using the outside versus inside structure. And I would say if you're going to look for a level of structure that's important, I'm not saying inside structure isn't important, but it starts with your outside level of structure. Those are going to be your most important levels because those are the previous unblemished levels of structure. So yeah, I would look back as far as you need to identify those levels. And that's one of the benefits of starting with a higher time frame, right? When you start with a higher time frame, you can get a bird's eye perspective of those levels, mark them up on your chart, write them down in your sheet, whatever you need to do. And then when you go down to your lower time frames, you know exactly where you're at. And that's why I like multiple time frame analysis, because you start with that perspective, you know exactly where you're at in compared to important levels, and then you can go down to your lowers and get the business on the actual trading stuff. Real quick, Ross says, I use the analogy of shining a light to the left. Where it reflects is the previous level of high, low. Anything lower between is in the shadows. That's a good one. There should be an indicator like that where you actually get a light bulb and you shine it and you're like, where does it go? And if it reflects back, I don't know how to do reflections, then it's relevant, and then everything else goes dark. That's pretty cool. That would be a cool indicator, Ross. Before you go, this is the very last warning. On May 29th, we have an online 3-hour workshop. Not a 3-day one. We're going to do everything in 1 day, 3 hours, short, quick, no fluff, no BS, straight to the point. There are a few seats left, so if you want to sign up, check out the link below, or if you're on desktop, head over to www.tier1trading.com and register soon, because there are only a few seats left. Last warning.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.